Hello students, I hope you're all doing well. Welcome to another video by QuickStudy. And this video covers the interpretation of break-even diagrams from topic 1.3, putting a business idea into practice. So without any further ado, let's get started. In this video, we'll learn about the concepts and calculation of break-even level of output and the margin of safety. And additionally, we'll also learn how to interpret break-even diagrams, which includes the break-even level of output, the margin of safety, and the profit and loss. So first of all, I'd like you to consider this example. Touchingham Sales Limited is a manufacturer of windsurf sails based in Devon. So what they do is essentially manufacture windsurf sails, and they have identified a potential market for new windsurfing sail designs. And after they have received positive feedback from people who have used their product, they want to launch it in the market, right? So they plan to sell the sails online and also across 30 different sports shops in the UK. So before they want to start this business, they would need to assess the profitability in this industry or the market. So how do they do that? First of all, the company has to estimate the sales and compare them with the break-even level of output. And what break-even point essentially tells you is the number of units that they need to sell to cover all the costs that they have incurred. A profit is made if they have made the break-even number of sales, and if they're not able to achieve that many units of product sold, they'll make a loss. And understanding the break-even level of output for any kind of business is crucial. So before you calculate the break-even point, you need to identify and quantify all the costs that are associated with your product or service. So first of all, as we have already discussed, there are fixed costs and variable costs. You need to be able to identify the production costs that are associated with your product. And in this case, since we took an example for windsurf sail, we can set the fixed cost at £18,000 per month, and the fixed costs could consist of expenses like the rent that you pay, the salaries and expenses for the managers, as well as loan repayments. And the variable cost, we can set the variable cost per windsurf at £200, and this could consist of raw materials, the packaging costs, and this will definitely vary with the level of production and the sales. And for sales revenue, how much do you set the selling price of the windsurf sail, right? So how do you really do this? First of all, you'd have to do market research. And market research data tells you that people are willing to pay anywhere between £400 and £500 for your product. So say, for example, you could decide to sell the windsurf sail for £450. So in short, we could say that our monthly fixed costs are at £18,000, whereas our variable fixed costs per sale would be at £200, and the selling price that we have set for our windsurf sail is at £450. So before we learn to draw a break-even chart, you need to understand that a break-even chart can be really helpful as it can show you the profit and loss at every level of output. So there are particular information that you need before you start and draw your break-even chart. First of all, you'd need the total cost. And how do you calculate the total cost? Total cost is calculated as an addition of your fixed costs and your variable costs. Then you would also need to calculate the variable costs. How do you do that? So variable cost is calculated at variable cost per unit multiplied by the number of windsurf sales. And how do you calculate the sales revenue? You calculate the sales revenue by multiplying the selling price per unit by the number of windsurf sails that you're going to sell. Then you also would need to determine the maximum monthly production output, which for our example, we can set at 200 units or 200 windsurf sails per month. So now to make things simpler for you, we will draw the break-even chart in 5 different stages. Now to start it off with, stage 1 involves creating the chart. And in the first stage, what we're going to do essentially is we can record the information on a graph. Quantity sold is plotted on the horizontal axis, whereas the costs are plotted upward on the vertical axis. And the horizontal scale runs from 0 to the maximum possible sold, which you have set at 200 units, whereas the vertical scale will cover the revenue range, which could be from £0 to a maximum of £90,000. So for stage 2, we are going to draw the fixed costs line, and in our graph, we'll draw the fixed costs line horizontally, because as you already know, fixed costs do not really change with the level of output produced. And for our example, we have set the monthly fixed cost at £18,000. And stage 3 involves showing the total costs. And For the total costs, we would need to add the variable costs and the fixed costs. And as we have already talked about it, variable costs will vary with the level of output that you have produced or sold. So in essence, if you have produced nothing or sold nothing, the variable cost would be £0. However, if we were to sell 200 windsurf sails, then our variable cost would be calculated as we have determined the variable cost per unit to be £200. So we will multiply £200 by the 200 units that we can sell. So the total variable cost will come out to be £40,000. And we have already determined to be the fixed cost at £18,000 per month, right? So the total cost line starts from where the fixed cost line meets the vertical axis. And the gap between the total cost and the fixed cost line essentially represents the variable costs. And stage 4 involves showing the revenue. So the third line drawn from the chart represents Tushingham's income from sales, which is also known as revenue. And when no sales are sold, no revenue is generated. So the line starts at 0. And since we have already determined the selling price of our product to be at £450, the revenue is calculated as £450 multiplied by 200 units that we're going to sell. So our total revenue would stand at £90,000. And revenue line is a straight line between £0 and £90,000. And now moving on to the final stage of drawing our break-even chart, it involves identifying the break-even point. Now the break-even point is where the sales revenue line crosses the total costs line on the chart. And if you were to draw a vertical line down from this point to the quantity sold, you can identify the number of sales that you have to sell to cover all your costs. And on the chart, the break-even point is where the sales revenue line will meet the horizontal axis or intersect the horizontal axis. And the distance between the revenue line and the total cost line on the chart represents the profit or loss that has been made at the level of sales. Alright, now that we have learned how to prepare a break-even chart, it's also important for us to know how do we calculate the break-even point using a formula. And that is because preparing a break-even chart can be time-consuming. So managers need a quick and easy way to calculate the break-even point. So the formula to calculate the break-even point is fixed costs divided by price minus variable costs. And from the example that we were talking about for Tushingham sales, we had determined the fixed cost to be £18,000 and the variable cost per unit to be £200 and the selling price was determined to be £450. Now, if we put these numbers into the formula, the results will come out to be 72 sales. And what this number tells us is that Tushingham sales needs to sell at least 72 units to cover all their costs before they start to make a profit. And now it's important for us to know about margin of safety as well. So what is margin of safety really? It basically acts as a safety cushion for your business. It is the actual difference between the level of output and your break-even units. Now, the larger the margin of safety, the more comfort it is for your business. And if I were to give you an example, say for example that the Tushingham sales break-even level of output has already been calculated at 72 units, and the actual demand for the sales is at 100 units. Now, if you were to calculate the difference between 100 and 72, it gives you 28 units. And what that essentially means is that Tushingham sales can afford to lose sales worth 28 units before they start to make a loss. So what is the formula to calculate margin of safety? You can calculate margin of safety by calculating actual sales and deduct the break-even point. Alright, so you need to understand that business decisions are made today with future outcomes in mind, and it's important that you make effective decisions. And break-even point can help managers answer critical questions like what will happen if the prices of a key ingredient, which may be a raw material that you're using in your product, if the prices of that raw material increases by 25%, what impact does it have on the profit if you did not change your prices? At the same time, it can also answer questions like what happens if you increase the prices of your product by 10% and how does that impact your break-even point? So these are just some of the instances that can help managers make decisions using break-even points. Alright, so break-even chart will also act as a visual representation which makes decision making much more accessible. You see, it's much easier if you can explain to your stakeholders using a chart or a diagram. You could explain to your employees as to why you cannot afford a pay raise right now or why there are layoffs around the organization. So using break-even charts can really help you with that. Alright students, so with that we have come towards the end of this video, and to give you a short recap, this is what we have covered in this video so far. We have learned about the concept and calculation of break-even level of output and the margin of safety, and we have also talked about a bit about the interpretation of break-even diagrams and how it impacts your revenues and costs. And students, I'd like to thank you for watching this video, and if you've liked this video, do subscribe to our channel since we post regularly on different topics and subjects that can help you ace your GCSEs. And if you'd like to know more about our one-on-one online tutoring services, do visit our website at www.quickstudy.uk. Thank you.